Hi guys. I hope you're having a great weekend and you're ready for the trading week ahead. So I want us to check a couple of charts so that we can prepare for the coming week. So we're gonna start with this one here being our US30, and then maybe we'll do maybe VIX 75 or Nasdaq and gold as well. So let's get started. And for those that are in the mentorship, we're starting with the classes tomorrow evening. And yeah, as always, we start at the top with our monthly chart. And if you're new here, make sure that you subscribe and you hit the bell icon so that you don't miss these type of videos when I make them, because this is where I share market analysis, I give tips and stuff. So let's get started. This is our monthly chart, and on the monthly chart we need to know where we are. We need to know where the bigger structures are, so that when you're trading on your smaller time frames, you don't want to upset the bigger guys. You don't want to sort of go against them. So for instance, here we can say this is our support, this is our monthly support. And if you've been here for a while, you would remember when the price was hitting the support, what do you say? We said we are expecting a reversal. If we get reasons to go long, we are more than welcome to do that, because of where you are inside a monthly support. So when the price hit that one, that's when you're targeting up there, and it did go there, which is why even when you're holding your buy trades, now that the price or the monthly resistance has gained control, you're trying to push with your buy trades that you got maybe from H1. It's no longer a good idea. You can close most of your trades and just leave one running, just in case the price is going to take that one out. But the fact that this is a bigger zone, you don't have to try and go against it. So that's all that we can see here. The price is sort of 50 way between the support and the resistance, and it's currently coming from the resistance. So that's all that we need from this. And let's put a horizontal line so that when you're moving down, we know where the the monthly resistance and the monthly support starts. So this is our support. So we just used this and we used that. That's why I put the horizontal lines. So let's move on to the next time frame. Remember, we're doing a top-down analysis. We always start at the top. We always start with monthly, move all the way down until we get to the time frames that you are trading. So this is how our weekly looks like. So on the weekly, when we were going down, we had this as our bearish trend line. I'm sure you have seen me doing this even in the other videos, the analysis videos of this US30. So that was our trend line, and the move from this support, it went all the way up and broke it. And on our way down, because we went up, we broke the trend line and we broke the area of what? Of resistance. Weekly sort of was sort of to the upside. When it was going up, we did have like a market pause here. So this was the nearest area of support on weekly, but the area of resistance is up there. Not sure if it was hit, but I doubt. Maybe it was missed by a smaller margin. Yes, I would have put it there. That's your weekly area of resistance. But remember, it is inside the monthly, because we said the monthly starts here at the horizontal line and probably goes until that high. So that's your monthly, and you've got your weekly. That's just here, and we know it is inside the monthly. So just because the price didn't hit the weekly, it hit the bigger time frame, which is why I'm saying once the bigger guys gain control, you don't want to hold for long. You exit. Maybe you can leave one trade running and hope that it will sort of just in case the price passes the level, then you still have a trade. But you can't leave all your trade running while you can see that the price has hit a higher time frame zone. So that is all that you have on your weekly. Your weekly, basically, you have this as your resistance and this as your support, the trend line taken out. And when the price hit that monthly area of resistance, it gave us what? A bearish rejection bar, which is that one there, where you can see that the price hit a pool of sellers in a form of what in a form of in a form of monthly area of resistance. So once that one gained control, they were selling orders that we were expecting from inside there, which is why they said the buyers, they ended up being pushed down and they left a tail. That's when we have that bearish rejection candlestick. So from there, the price was coming back, coming from our monthly target, and it's coming to the weekly. So if weekly, let's say weekly was your execution time frame, if you are trading weekly zones and structures, then you wouldn't take this one because of where you are coming from. Monthly is saying down, your weekly you're trying to go to the upside, so you're trying to fight that weekly with your that monthly with your weekly. It was never going to be a good idea. That's if the weekly is your execution time frame. But if weekly is just a time frame that you use to see a bigger picture, and then you're still going to execute on a smaller time frame, maybe H4, then you need to understand that the price is coming from a monthly resistance, but the time when the price was coming to this zone, weekly was bullish. So my time frame, the bigger time frame, which is weekly, is bullish. The only negative thing is that we are coming from a monthly area of resistance, and our nearest zone, this one that I marked here, it is formed by a pin bar, and it's not a good zone. It's not a good zone. So for those reasons, you know that it's not a good zone, you know where you're coming from, you couldn't go in with what buy limit. You couldn't go and place a buy limit here. Why? Because of where you're coming from and because of the basing candlestick that you have at your zone. They were not very nice, so you couldn't do that. So you could only take a buy from it with confirmation. Once the price gets inside, maybe you're seeing signs of reversal, then you could decide to go in. But because of what is happening, you can't go with a limit order. So that is all that we have on weekly. Let's check what's happening on daily. So on daily, this is what we had. So as soon as the price hit that, remember this is our monthly area of resistance. As soon as the price hit that, it came back and it took out even the trend line that you had. You can put it, where can you put it? Even if you put it like this. So you had a trend line and you took it out, and then at some point this was your nearest area of support. It was taken out and the trend line taken out. So this is where you could have searched for trades. You know your trend line is taken out. You know you are just bouncing from monthly resistance. You see, all of these bigger guys are pointing to the downside. On this time frame, if it's your execution time frame, you can justify it by saying the trend line and the areas of support have been taken out, which shows that the sellers are very strong. That's how you could have searched for trades to go short if this was your execution time frame. But remember, just because you know that something is bearish and you're supposed to be searching for trades to go down, does not mean you can just open your MT4 and sort of sell from right where the price is at, because then you might be a victim of like a pullback. Then that's where you'll be in trouble. So which is why, if you know that you're supposed to be taking trades to the downside, the next step will be you identifying where exactly am I gonna search for those trades to go to the downside. Just knowing what to do alone won't be enough. You still need to know where you're going to do that and how you're going to do it. Then you will know that you have covered most of the aspects that you need. So here, like we're saying, the trend line taken out as coming from the monthly area of resistance and all those factors, you had every right to look for trades to the downside. So if your trend line was somewhere there, then you could say maybe this smaller area here was the one that gave you a move and broke the trend line. Then once the price was pulling back to it, you could search for trades to go down. That's how it works. So you must wait for the price to show you what it can do. Then from there you try and join the movement. Because if you're just trying to like for instance, if let's say when the price was still like this and you're saying everything is bullish and there's no sign of saying that it might go to the downside, you are still going to try and buy as it is moving up like that, but you are forgetting that you are inside a monthly resistance, which is way bigger than what you're trying to do. it might just demolish all the structures that you have on your smaller time frames. So that's all that we're having on what, on daily. So currently our daily nearest area of resistance is this one, and the nearest of support we can take this one here. So that's our support and that's our resistance. So depending on whether you are using this for as your higher time frame or as your execution time frame, then but you're still gonna use the zones to say that maybe if you are trying to go long, that location is key, then you'll be searching for trades to go long from this. But no limit order, because of what, that bigger time frames are not possibly not in the direction that you're trying to take trades in. So because of that, you need to wait for confirmation. So that's how you should do it. So when you're going down to H4, you need to know where your structures are at from higher time frame. So you need to know this and you need to know that, and also this. That's a daily bearish trend line. So we will see when the market opens whether if let's say for instance it opens and then it comes down here and then it gives you signs of reversal. Maybe you're using this daily as your higher time frame, and then maybe on your higher smaller time frame like H1 you're getting this into that daily area of support, but because you don't trust it, because you don't trust the fact that you don't trust the fact that the sort of the trend on this time frame is no longer going up and you're trying to buy, then you can wait. While you're waiting, let's say maybe the price reacts from this level and then it goes up like that. So this movement to the upside might break an area of resistance, and it will break the area of trend line, the trend line. Then once all of that is done, maybe that will be more confirmation for you to say, oh, because of what the bulls just did, I think I can hope that they will pull back so that I can take trades from this level that did what, this level that pushed up and gave us a break of a trend line and a break of a zone. You see? So that's how you should do it. That's how you should do it. So for currently we can say that it all depends in, like, I hope this makes sense, it all depends in like what the thing is gonna do around this. Where is it? This being our nearest area of support, and if daily is your higher time frame, then you know that once the price enters this, you've got all eyes on it. You're just waiting to see. I just want to see on my my execution time frames, what type of candlesticks am I getting. With those candlesticks, can I take a risk and say that I'll trade those candlesticks and hope that they will push up until there. So you'll make all that decisions once the price gets inside the zone. That's if it gets there. So that's what I'm seeing on this one. Then let's check H4 quickly. H4 just looks more or less the same as Nasdaq, because when it was going down, you could put your trend line there, and then this was your nearest area of support taken out, and then it moves to the next one, which is this one here. That's the one that did what? That rejected the price. And you can say that this one here had more confluence because of what? The price was testing H4 resistance and also H4 bearish trend line. You see, that's where you had more confidence to say that even if you were like searching for trades to go short, at least you know that at this level there is probably going to be more resistance to prevent the price from going above the point, because of what? Where it is located. And then from there it just shot straight down. So we will see. So from here, what we can say we are waiting for is just we just hope that, because you can see that on this time frame there is definitely a zone there, and the price is currently around the zone. But because of what, this zone is slightly higher, maybe you can look for another one inside here where you feel much safer to say that I'm trading from this is what, is it a daily? Yes, I'm trading from a daily zone. You see, that's how you should do it. So that's all that you can expect from this one. So which is why I'm saying that if you were interested in learning this style of trading, how to tackle the market, how to make sense of it, how to to even get to conclusions like this, just so that you can spot higher time frame zones and neglect the ones that don't go higher, you can always contact me, and then we will see if we can get you lessons. 9590383. So this is my Telegram number. If you just hit me up there, then we'll take it from there. So that's all that you can expect from this US 100, I mean US 30. So just look for rejections from around this. If the price dips into that and you're getting signs of reversal, of signs of weakness, then you can take your chances. But don't do that. Don't take your chances and then let's say I'm gonna exit, I'm gonna put my TP there. Why? Because you're executing on this time frame, and this time frame is not bullish. You are taking a bullish trade, which means it can be just a short-term trade, and then once the price has convinced you more by taking out more structures on its way to the upside, then you can change and say this time frame is now bullish. Then which means if I'm taking trades, I can hold them a bit longer, because otherwise you're going to be disappointed. You're going to be disappointed because there will be times where the price will do this and then it continues with what the trend to the downside. So to avoid being a victim of such, make sure that when you're taking your trades, you always target the next opposing structure, be it the next trend line or the next resistance. That's when you're taking a buy. So if you do it like that, you are able to articulate it like I do, and then you'll be able to come up to a conclusion where most of this stuff makes sense, which is what I'm going to be teaching the guys from tomorrow, because I want to start them from the basics. I'm not going to jump and tell them about, time frame combinations, this, that, no, because I understand that they might not be on the same level. Some might be, neutral trading and stuff like, which is why I need to make sure that everyone gets the best value for what they're paying for. You see? So I will see you guys tomorrow, hopefully, or I think around Tuesday, the price will definitely have given us something. So we will see how it reacts from there. So if you're interested, you'll text me, and then if not, then I'll see you in the next video. So our target for now is this, and hope that if you get reasons to go long, you can go long until there and just let the market decide on what it wants to do from there. So, but if you don't get any reason to go short here, to go long, the price might end up breaking to the downside. So you need to make sure that once the price hits that level, you pay much attention to see if you've got any reason to buy or not. All right, guys, that's it. I'll see you in the next video. Sharp.